Government seeks to alter the existing tax framework as part of the strategies to boost the medium-term domestic revenue mobilization. The new tax proposals include amendment of the income tax, stamp duty, excise duty, tax procedures, and the value-added tax. The Minister of Finance, Planning and Economic Development presented the tax bills to the Committee of Finance in Parliament.
We propose to amend in all tax bills to remove referenced hospital and maintain specialized medical facilities.
The ministry officials first faced hard time to explain the due diligence justifying the impact assessments of the proposed tax reforms.
Regarding the explanatory notes, not explanatory, the research on tax bills that are being laid, and it has been said here that they have one and the minister confirms that he's going to lay after. Can we confirm that they are all available and be laid at after your presentation of the bills?
Minister of State for Finance, General Duties Henry Musasizi told the MPs how the move fosters economic growth.
To, number one, balance the need for additional revenue with the impact on consumers and businesses. To ensure stability and predictability of the tax system.
Minister Musasizi told the committee government will charge 100 shillings tax per litre of both petroleum and diesel and 300 shillings on kerosene to boost revenue up to the tune of 200.92 billion.
The 300 kerosene is used for many purposes, but the main purpose is it can easily be mixed with the diesel, what we call adulteration.
I would have expected in this year the ministry to come up with measures, even if they are not revenue generating, but measures that can actually push growth so that URA can collect money in future.
The Committee on Finance looked at the government's proposals to slap 0.5% on withdrawals through agent banking, 5% charges on non-business assets like land and rental properties, and unextended tax on cement products like adhesive. Minister Musasizi says beneficiaries of agent banking need to face the same tax order as incurred by the mobile money users. The tax on cement products like lime and adhesive is projected to hike building costs. Anyone intending to sell off property, sell land and rentals will be charged 5% of the gains.
Land, we are interested in the gain because some individuals are not in the business of buying and selling land. Therefore, they cannot account for it as business income. They are individuals, me and you, who owns a piece of land and I sell it at a gain.
The proposed tax bills will generate at least 1.9 trillion if Parliament agrees with the government proposals. This comes at a time when a section of the community is criticizing government for inadequately sensitizing the masses on the tax reforms and introduction of the digital solutions.
How are you going to grow?
Daniel Mugoya, Gloria Gitabinji, UBC News.